Welcome to Guardian Capital's Market Outlook discussion for the month of October 2025. The agenda will be discussing four things. First, education, the thinking framework. Second, earnings. How has the earnings for the BSE 500 companies been for the current quarter? And three, valuation and expectations. In this, we'll be discussing how the market is currently being valued and what's the outlook going forward. And fourth, the sectorial view. Principle 1. Earnings growth determines 80% of returns. If you closely look at the table, we would like you to focus on the red circles where for the past 3 decades BSE Sensex price has grown at a CAGR of 11%, whereas the earnings have grown at a CAGR of 10%. So therefore we can strongly conclude that there's a high correlation between price growth and earnings growth. Principle 2. Revaluation growth determines 20% of returns. If you look at the example below, Asian Paints over a period of 11 years have delivered a CAGR return of around 13%, of which 80% have come from earnings growth and around 20%, which is 3%, have come from the revaluation growth. What's revaluation growth? In 2014, people were willing to pay 43 times for every 1 rupee earned by the company, whereas in 2025, the same people were willing to pay 61 times for every 1 rupee earned by the company. This is the revaluation growth. In this slide, we would like to highlight the importance of extra return generated. Let's just say you've invested 1 crore lump sum at a rate of 11% for 30 years, you would end up with a corpus of 23 crore. However, if you earn 1% extra return, your corpus amount would increase by around 7 crore to 30 crore. And if you generate an additional alpha of 3%, which is around 14%, you would end up with a corpus of 51 crores, which is 122% more than what you would have earned if you invested at the rate of 11%. So this signifies the importance of staying invested for longer periods of time. Now moving on to the second aspect of agenda, the earnings slide. From the table, it is clearly visible that there's been revenue slowdown across market caps for the latest quarter ending June 25. If we look at BSE 500, for the latest quarter, the revenue growth was 4% as against its historical average of 9%, and for large caps, it's around 5% as against its average of 9%. Mid caps about 6% for the current quarter as against 9% for its historical average, and in small caps we've seen the revenue growth has been flat for the quarter. However, on PAT side there's been significant improvement, primarily owing to margin expansion resulting from lower debt levels. Third, valuations and expectations. Historically, companies in the BSE 500 have grown by a CAGR of 11%. However, as we seen in the previous slide, the growth over past couple of quarters is coming down, and for the latest quarter, it was just only 4%. And on valuation front, post corrections, there's been a sharp recovery in the market, and currently all the indices are looking overvalued, particularly the mid cap space, overvalued by 24%. Followed by BSE 500 and large caps about 16 and 15%, then followed by small caps and banking and finance, which is about 12 and 10%. And now overall outlook going forward, with earnings growth slowing down, valuations have gone up again, and in this case it would be ideal to wait and watch. And the last aspect of the agenda, sectorial view. Here, if you see, about 73% of the economy is fairly valued and about 27% of the economy is overvalued on valuations front. On current revenue growth front, about 23% of the economy is growing faster than its historical growth rates, and about 77% of the economy is still lagging its historical growth rates. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.